Ken Boyd with St. Louis Test Preparation. This is the second of our videos on understanding the brokerage statement. Here you'll see our email and our phone number. You'll also see our YouTube website and our regular website later in the presentation. So we're going back to the importance of the brokerage statement. We said again it's a way of understanding red flags, risks that may come up in your portfolio. That's why we review the statement. We want to understand the tax implications and also changes in risk that may occur to your investments that get reported in the brokerage statement. We already talked about the types of income, dividends from both stocks and mutual funds, interest from bonds, and the importance of knowing where that money is going. Is it being reinvested in your account or is it being paid out, and if so, where? So here's our example client statement, and the top is the income portion that we discussed in a prior video. I want to talk about realized gains here, which is toward the bottom of the statement. First of all, let's define that for you. Realized and unrealized gains. A realized gain is when you have a buy and a sell. And if that's occurred and you have a realized gain, then there will be a gain or loss recognized on your taxes. But there has to be a buy and a sell, sort of a match, if you will. But with a buy and a sell, we have to distinguish between short-term and long-term. And long-term is generally a year or longer. So if you're getting ready to sell something, you may want to ask your broker, how long have I held it? Because the rate of tax may be different depending on whether the length of time between that buy and sell is short-term, less than a year, or long-term, longer than a year. There's a tax impact. Now, one thing that's confusing is many brokerage firms list unrealized gains. And what we mean by that is there is a buy, but there is not a sale yet. And if we have a buy with no sale, there is no tax impact yet. Let's look at this example statement, and we'll see what we mean. So at the bottom part of our statement, we have realized gains. And in this case, it's for stocks. Home Depot, 100 shares. We bought it in January of 2002 for $20 a share. We sold it during March, the period of this statement from the brokerage firm. We sold it for $23 a share. We had a $300 gain, $3 a share times 100 shares. That's long term. Most brokerage firms will distinguish, they'll segregate between long term and short term. So below it we have our short term gain. 300 shares of McDonald's purchased this year, March of 2009 at 50. Sold in May of 2009 at 45 for a loss. $5 a share times 300 shares, we have a $1,500 loss. Gain and loss. It's another area of confusion. Many times the brokerage statement will show long-term losses and gains, short-term losses and gains, but then show you a total of both, and you've got to be careful when you read the statement to know whether you're looking at a total for both short-term and long-term or whether they're being shown separately. The bottom part of the page is unrealized gains. Now, brokerage firms have a reason for showing this that helps the client. It's nice to show the client, if you sold the stock as of the date of this statement, would you have a realized gain or loss if you sold on the day when the statement came out? Again, a red flag, some more information to the client who may be thinking about selling a stock at some point. And again, this is divided by short-term and long-term. ExxonMobil is our long-term holding. We bought it in 2005 at $75 a share. As of the date of this statement, the market price, not the sale price, the market price is $67 a share. So if we sold it as of the last day of the month when the statement was produced, we would have a realized loss of $4,000. As of right now, it's unrealized. In the short-term section, John Deere stock, we have 400 shares. We bought it earlier this year, 4509 for $17. If we were to sell it as of the date of this statement, the market price is $21 a share. We would have a $1,600 gain. And just like above, we net the long-term and the short-term together to show the investor the total unrealized gain and loss between the two. So while I think it benefits clients to get this extra information on unrealized gains, people need to realize that that does not have a tax impact if it's unrealized. It does not have a tax impact if it's unrealized. This becomes particularly important at the end of the year. We're getting toward the end of the calendar year, which is the tax year for just about everybody. You may want to consider talking with your accountant and considering selling a stock for a gain or a loss depending on your financial situation. So these statements, and particularly the gain section, gain and loss sections, become particularly important at the end of the year. So that's the end of our two sections on the brokerage statement. Our YouTube channel, Ken Boyd STL, all one word. You'll find a complete list of the videos on YouTube on our website. The second bullet point here for live tutoring and chat sessions, stltest.net is our website. A listing of all of our videos is in an Excel document at the bottom of the home page. You see our email address and our phone number. Thanks for watching. We'll see you next time.